This episode's made possible by Planful.
Hi, this is Ken Bowles, CFO of Wilson HCG, and you're listening to the CFO Thought Leader Podcast.
This is episode 933.
We did a lot of work over the last couple of years to actually break down our business to have a P&L by product area, really top to bottom. So here's the revenue, here's the gross margin, here's how much sales and marketing we're putting behind it, here's how much R&D we're putting behind it. That completely transformed the internal discussions and the discussions with our board, which means we can actually look at what's the rule of 40 for every one of our product areas. What's the profitability profile? What do we think about relative investments? And so the trade-off discussions you're having, the discussions can be more in depth in the boardroom around well, how do we think about investing more in this business versus that business? Here's the growth profile of this one. Here's the unit economics of that one. As difficult as it is for the finance team to put this together, because it was a big endeavor to really structure everything in a way where we can do this automatically, but well worth the investment.
Hi, it's Jack. On today's show, we speak with Charly Kevers, CFO of Carta. When Charly Kevers took his mentor's advice and swapped a corporate development role at Hewlett-Packard for a tour of duty inside HP's investor relations arm, he looked forward to tackling a variety of IR requisites, including crafting the messaging that follows a change at the top. 2 years and 4 HP CEOs later, Kevers exited HP, knowing that his IR term, with its extra helping of CEO turnover, had afforded him an IR stint unlike any before it at HP. You'll hear that story and much more on today's episode. We'll begin after this.
Hi, I'm Rowan Tonkin, Chief Marketing Officer at Planful, and we're a proud sponsor of CFO Thought Leader. At Planful, we're empowering teams just like yours to drive peak financial performance in every corner of your business. What sets Planful apart? We have purpose-built applications for every department, from FP&A to accounting, marketing to HR, all with built-in financial intelligence. This means we can get you up and running within weeks, and it requires minimal IT involvement. So you can rapidly and seamlessly engage everyone across the business in your key financial processes. Best of all, you can't outgrow us. We take the pain of growing away with an unmatched ability to scale with you. You have an endless runway with Planful. See why over 1,300 customers around the world choose Planful as their flexible, user-friendly, end-to-end financial performance management platform. Go to planful.com and see how you can make financial performance a team sport in your business.
Hello, we're speaking with Charly Kevers, CFO of Carta. Charly, welcome. So, Charly, we always begin by asking our guests to look back for us. We're wondering if you can identify for us some of those experiences you feel prepared you for a finance leadership role. What would come to mind for you?
There's a few, maybe 3 stand out in terms of experiences that I've had that I think have really prepared me for the role today. First is my career in consulting and investment banking. So I'm one of those people who did both professional services careers. And in terms of what was most helpful there, it's really what you learn the most in those roles is to quickly ramp up on a topic, to go deep, to unfold problems, to really structurally understand what you need to solve, and be able to communicate it back really accurately to all the stakeholders. And so learned a lot in those careers on how to do that, and that served me throughout my career.
You have a kickoff that's interesting, though. I mean, you don't begin in the States. Can you just share? And some of the companies, I just want to tip your hand a little bit here, that it was LEK Consulting. Those in the consulting world would know that brand right away. Samsung for 2 years, but it's also Seoul, Korea, and Paris. And you land in San Francisco and the investment banking world eventually. Just trying to whet the appetites for you. So, and Hewlett-Packard for 4 years, just a really interesting finance organization that they have. And so, have I boiled things down correctly? And things really kicked off in France. Is that right?
Yeah, so first in France, from France, I actually spent some time in the US during my career in France, actually launching the San Francisco office for LEK Consulting, and that was right during the dot-com boom, and crash. So it was a very interesting time to be there and to be exposed to the technology, which gave me the appetite to come back. And that was the one experience where I decided I'd have to be back in San Francisco and finally made my way back. Purposefully in the early years of my career, wanted to experience different regions of the world. And so was in Europe, wanted to experience the US, which I did. And then out of business school, made a conscious choice to go work in Asia. Just believing that business is fundamentally global at this point and making sure I would have more experience and know how to run a business across all these different regions.
Were you recruited out of business school? Did they and they said they were looking to have you be based in Korea at the time, and you're like, that's what I want. Yeah.
It's a specific team that does strategy for Samsung for all of their international markets. So they mostly recruit individuals who come from the markets that they're doing research in. So it's mostly a group of folks from the West, US and Europe for the most part, that actually advised the leadership at Samsung on decisions on how to expand their business outside of Korea.
And
but it was a phenomenal experience in terms of learning the culture over there.
And here you are with already an international resume and 4 or 5 years consulting experience and a business degree. So you're kind of like a slam dunk for them. Yes. How am I doing? Am I right? Or was there some other criteria that you had to pass to have them hire you?
It was an internal consulting role, so a lot of it, like the recruiting, was around, well, can you communicate problems? Can you really work with a broad set of stakeholders, and can you adapt? And so a lot of the recruiting was, well, tell us more about the international experience you've had and the different types of stakeholders you've had to manage and communicate with. And so that's how I ended up there. But then made my way back to the US when I could.
When you make it back to the US, I don't think you're thinking I want to be a director of finance or a corporate finance executive. You're thinking banking when you come back. Is that right, or was it different?
Well, interestingly, it's not clear in my career early on, but in consulting, a lot of the work I did was for investment funds, so private equity funds in Europe, which ended up meaning I spent a lot of time with investment teams, but also the CFOs of a lot of targets that they would evaluate from an investment standpoint. And I was fascinated by the role. And so that's when I made the decision I want to take the finance route. I did a few things in between, but already knew in business school that what I wanted to go towards was the finance route. And banking was just the way I was able to, get back into tech and come to the US. And certainly had interest in experience investment banking, because what everybody else says is true. You learn a lot in a very short amount of time. And I did. And when I was there, it was 2007, so right before 2008. And I didn't do a lot of pitching. It was mostly deals. I was on the M&A team at JP Morgan, and all of it was just how do you get deals done? How do you think about valuations? How do you think about modeling a business? So it was fascinating and taught me a lot about the basics of tech.
We jump a little forward, and there you are, a mild-mannered corporate finance executive at Hewlett-Packard. I mean, you make another conversion, and your consulting and banking days, you are. And what I'm getting at is you're now becoming a corporate finance executive, but suddenly you look more typical of future CFOs, to me anyway, as I look at your bio. Would you think that's fair, or what would you?
Yeah, I mean, that's definitely what put me on the path, no question. I mean, HP being a very structured organization with a lot of experience, I learned a tremendous amount in how finance organizations are run, how a large organization of that scale is run. And there, the most salient experience for me was investor relations. I never thought this was something I would do. I was on the corporate development team and the strategy team at Hewlett-Packard, so mostly focused on M&A and those types of transactions. And I had a mentor at HP who told me you should go try investor relations. It's a skill set everybody needs if you want to go down the finance path. What I did not know is when I took the role, so I had the role for 2 years. This was a period during which HP had 4 CEOs. So let you imagine what it is as a broadly owned company in tech. HP is owned by a lot of the large investment funds. CEO transitions basically every 6 months. Not quite, but so that taught me a lot. This is what prepared you for the role. It's a highly stressful role if you're in front of the Fidelities of the world who are asking you a lot of questions about what does that mean for the business and for my stock. It's helped me in many cases after that to really rationalize this is not as bad as what I've experienced there. And so it's given me a lot of perspective.
Amazing. Yeah. And again, you were a little over 4 years at HP. So you're making an investment at these places every step of the way. And next comes Salesforce, and you're there 3 years in a corporate development role. So you're reaching back to your M&A, your M&A experience, perhaps. What would you tell us about joining that organization, which really has a lot of intrigue about it as well, HP and Salesforce?
Yeah, so it was the move there was HP, a great tech company, but very focused on hardware and not necessarily as exposed to what was the high growth area at the time, which was software as a service. Yep. And Salesforce is one of the leader in the space. When I had the opportunity to go help them grow the business, especially given how acquisitive they were and have been over their history, it was tough to say no to. And so I learned an insane amount on how to run a SaaS business and how to think about the metrics. And but most importantly, interestingly, if I think beyond finance, what I really learned in working on all these acquisitions is how much culture and people matter to make these business opportunities successful. There's a lot of things people talk about regarding M&A. The math and the models are not complicated. Like if you're a good finance person, it's not that difficult to get a sense of where the business can go, to understand the metrics, to put a value on it. What's really complicated is to evaluate from a people standpoint what will work, what will not work, what you put in place to make that successful. So that's another experience where I've learned a lot in terms of how the people aspect of things matters a ton, no matter your role. Because I've lived through situations where the people weren't right, or the cultural alignment wasn't quite what it should be, and that created way more problems than just the wrong business decisions per se or the wrong finance analysis.
What are the early indicators? I understand it's people. I understand but maybe you could illustrate for us if there's like a early alarm system for whatever reason, how there's a misfit.
Yeah, I mean, I think a lot of it is like during diligence, being very, very explicit around what do you look for, right? Like just how the business is run. Well, like, is this a business that's really focused on looking at data? Is it just one person making all the decisions? It's things as simple as this that then force you to look at, is there alignment with how we run the business? Salesforce had a very specific way that they were running these acquired companies. They had a whole team dedicated to them, which was great. And that was a big learning as well. But if they can't integrate and they can't already kind of fit into a certain way of operating, that would create a lot of issues in the background, meaning people would question, like, why do we have to do it this way? And it would slow down a lot of decisions that during diligence, we actually spent a good amount of time just evaluating how does this company run? How are decisions being made?
Yeah.
Who makes the decisions? Do they hold their targets? Are they disciplined? Are they not? And so all that comes into the evaluation.
I have to say, I think it's interesting. The evaluation, what you're talking about is really having conversations with the other company's management, really understanding how they perceive their business and explain it to others, and how, whether you're speaking the same language. It might look like the same company with numbers and growth, but when you start talking, all of a sudden something else is revealed
That's right.
It's subtle sometimes, maybe, but and as an IR executive, you learned the nuances of language, one would think. And here you are,
Yes.
After being on the front lines of HP's challenges, you really become highly skilled in management messaging and understand when a message is sending perhaps a mixed signal of some kind, as well as when management is being straightforward with you. How am I doing? Am I close to your world and the role of language? Yeah.
No, absolutely. I mean, all these learnings I use every day. Thinking about like how we make decisions, and we've done acquisitions ourselves yet at Carta, and a lot of the discussions were around: do we think from a people standpoint we can make this work? We've walked away from deals not having any confidence that we could get the two cultures to mesh, because that's really tough to change. It can evolve, but fundamentally change how businesses operate from that standpoint is extremely tough. And so a lot of learnings from that standpoint. And in the IR piece is, how do you communicate externally? How do you explain what's happening? How transparent do you want to be? What metrics do you focus on? Because there's a right balance. There's too much, too little. And so a lot of learnings on that front in terms of how you manage that.
So let me ask you this before we find out about Carta. Corporate development, again, you were hired into that role, but if you were the CFO, who are you looking for? You're looking for Charly Kevers back in 2015 or when you were at Salesforce, because he's going to go out and have those conversations. He's going to go out and get to know the managers. Yep. He's going to go get a sense of whether we're all together on the same page or whether they speak, like I said, a different language. You can have plenty of FP&A people number crunching in a conference room and say, yeah, their people are great. We really enjoy collaborating with them here. But it's really the corporate development executives who are perhaps getting a better sense of how the senior management within the company, hands down edicts or communicates with the rest of the team in order to get a sense of the culture. It's not as if the CFO was wandering the halls of the company being acquired. He might, that perhaps there's a business dinner and a few breakout sessions. But the corporate development executives are the ones that might first get a sense of the culture. Am I right about that? Are they the ones who, make an assessment there often?
That's exactly what we so we have a corporate development team here at Carta, and that's exactly the thought process we went through, and how do we build it? And a lot of it is folks who have experience in dealing with executives at different type companies, but are comfortable having communications, establishing a relationship, getting deeper into how they operate. Of course, some experience in valuing companies, understanding how the market operates, even in terms of like, what does a term sheet look like, and what type of agreement you put in place? What are the things that matter, things that don't matter as much? And so oftentimes it is investment banking background, but it can also be folks with investing backgrounds, because all of these, these types of skill sets are quite similar. But the person themselves matters a lot. Their ability to build relationships is critical. And so that's what we tend to evaluate.
You also had the other component of international experience for corporate development. One would imagine that's also valuable. It depends where you're buying a business, I suppose, but very often it's a key component.
That's a great question, because I find, and I've found over my career that, for example, American companies tend to assume or just do the same thing we do when we buy a U.S. company, and it's not normal human behavior. We just refer to what we understand. But I've been involved in buying businesses in China, in Europe, and so in different parts of the world, and it all operates differently, right? And even local regulation, how a deal gets done, therefore how do you negotiate things. Culturally, you can imagine that's just do 10x the complexity of doing a deal in the US. And so that's generally somewhere where you're really thoughtful about how you evaluate it. But eventually everybody looks at this. Carta acquired 3 international businesses. And so we spent a lot more time understanding what are we missing, like really questioning our own assumptions, our own view of how the business operated to make sure we didn't miss anything. And then oftentimes getting local help too on like, hey, are there things we're forgetting to ask about to make sure we were thorough enough in our analysis?
Well, I don't think we have to. I want to get to Carta, but I'll point out that from Salesforce, you had another vice president of finance role before stepping into, I think, the CFO office at Carta. It might have not happened exactly that way, but you have been there since 2017. Let's find out about Carta. I might have a few more career-related questions a little later, but let's find out about this company, Carta. What does it do, and what are its offerings today?
Sure. So maybe the simplest way to summarize what we do, Jack, is think of us as infrastructure for the private markets. I think if you think about the overall business and what it solves, it's provide a lot of tooling for folks who operate in the private markets. What that means is on one side you have private companies, and that's where the business started in 2012, 2013, in providing all the infrastructure needed to issue equity to employees and investors. That's really where it started. Like all of this was paper-based, sitting in spreadsheets, really not managed centrally, and difficult to get access to the information. All we did is basically automate a lot of these workflows and make all that data centrally managed, not becoming a source of truth on who owns what of the company. And that, of course, translates into, well, how do you help employees exercise their options? How do you help the finance teams do all the finance calculations around stock-based compensation? How do you make all the compliance requirements a lot easier to manage for legal and finance teams? So think end-to-end, the valuations, the 490 valuations that are related to issuing equity. So think of us managing that full workflow from two founders all the way to public companies. The vast majority of our customers are private. That's what we focus on. But we scale from a couple employees or a couple founders all the way to thousands of employees and manage all the complexity that they need to handle from an equity standpoint. So that's one side of it. It's managing companies and employees. The other side of it is actually the investors who invest in these companies, which we've effectively made it easier for them to, in the early days, think of it as a brokerage account for private shares. You own shares in the public space, you go on E-Trade, Schwab, pick your broker to know what you own. There was no way for private investors to understand, what do I own in one pane of glass? They would have to call their lawyers, keep track themselves in a spreadsheet, and it would be very difficult to track what happens to these companies. That was step one. Because we had a lot of these private companies on our platform, we're able to then surface that information to them. That translated more recently into us now being a provider of fund administration services, which think of that as us managing the back office for venture funds. So we now have a full platform with a general ledger we've built ourselves. So think of it as running the accounting. I think for the finance community, running the accounting for all these funds, including all the communication back to their limited partners, who are the investors in the funds. And so that now puts us in a situation where we help manage all the source of truth around ownership for those companies. And the reason we even got into this business for funds is because we have all the information on their portfolio companies. So now that information is connected to what they're looking at in terms of how their investments are performing, what the value of those investments are. And so that's the broader platform today with a few additional products. The last one is connecting all of these stakeholders together and enabling them to transact on their shares. And so our platform also enables investors, employees, and companies to manage liquidity on private shares, to tender offers, block trades, different types of transactions. But looking at what is all the tooling we need to provide to the private space to be able to operate better.
Well, let's find out something of your the company's capital structure. Could you provide us maybe an abbreviated history of the company's capital structure, how old a company it is?
Yes, the company was started in late 2012, really got going on an operating in 2013. Wasn't an easy time to raise money from all the history I know from our founder, Henry. Really got going in 2014 with a Series A from Union Square Ventures in New York, because a lot of, I'm sure you can appreciate, it's a software company at heart with B2B SaaS in terms of the business model, but a lot of fintech components to it. We move money for our customers. There's a lot of underlying infrastructure that requires more of a financial understanding. And so a lot of connectivity to financial services. And so Union Square Ventures, being an active investor in that space, really was the first backer of the company. And then given our presence in the market over the years, we've had the benefit of being able to actually pick the investors we've needed to help us continue to grow the business and help support it. So we raised money pretty almost every year, not quite, but every year or every other year since the company got going, all the way to a Series G that was led by Silver Lake in 2021. And so a lot of funding rounds. Overall, we've raised about $1 billion to support the growth of the business.
And again, I think I said, was it 2017 that you arrived? Forgive me. Yeah, 2017.
Yep, 2017.
So tell us a little bit about what chapter you were being tasked to open when you arrive. And it's 6 years now, so one would imagine you've been you've moved a few initiatives forward. But what would you tell us about your arrival there, and what was really your original mission?
Yeah, so I was hired right before the Series C, which was in 2017, and so on the back end of the Series B, and a lot of it was just bringing a little more operational focus from the finance, and then scaling and supporting the business in terms of really understanding what metrics to focus on, engaging more actively with the business, and building the finance team, for the long term. There were a few members of the finance team at the time, mostly accounting focused. So at least the books were already in good shape. We've got a few regulated entities, so it was a good forcing function to make sure the books were in good shape, which was great. But the P&L wasn't necessarily in a way that the investors understood it. Like, what's the gross margin wasn't clear. What's sales and marketing? What's R&D? What's G&A? All the typical structures that you see that wasn't really available. So starting with those basics, do more planning around, well, how much do we need to invest to drive the growth, and having a more structured view of that. And then part of my remit at the time was also rethink the whole systems infrastructure. And not just finance. It was like, think about the CRM, think about the ERP, like think about the HR system. Like, what do we need from a data standpoint to help us operate better? And so definitely most of the focus for me was on finance, but it was a bit broader to helping think, what do we need operationally to be able to operate faster, better, to make sure everybody has access to the same information and make decisions faster. And so it quickly forced me to look at a lot more than just finance and the numbers that we were putting together.
I'm wondering if you can maybe identify what might have been some of the milestones to upgrade those systems and to bring them where you had the visibility that you were like, okay, we're getting somewhere here. Maybe you more quickly closed the books, or maybe there was a set of metrics that you could now produce, weekly instead of monthly. Anything you can share with us?
Yeah, I mean, some of it was it was that, like, being able to start even sharing financial information that everybody was like, oh, now I understand where I fit in the picture. Instead of telling everybody, here's how much we spend on payroll, everybody will go like, yeah, but where is that going, right? Which teams is how much? And that meant now having an accounting system with the right cost centers and really understanding how we track, or how we tie this to a planning system. And so it really started with just being able to communicate things back in a way that made sense to everybody. And starting with our board, that was really a big push early, is them understanding how the business was operating and how different parts of the business were operating. And so those were milestones where little by little we were able to provide more transparency and provide it faster and faster as we automated more of our systems. The main learning there, and I don't come from a deep systems background, but I was lucky enough to have I hired a controller, was one of my first hires, to really oversee all of our accounting and operations, financial operations, and he was really good about forcing us to start simple and not try to over complexify how we thought about system design, and really saying, what are the basic things we're trying to do, and then do a follow-on in terms of, okay, now make it a little more complex, and then more complex. And that we've done over the years, and that's served us greatly, because I can't tell you how many bad stories I've heard of folks who've tried to make things too complex too quickly. And with the natural turnover you see in fast-moving startups, it's complicated if you don't keep it simple, and if one person is the architect of something that, and then suddenly disappears, nobody knows anymore how to manage it. And so a lot of it was just like trying to be thoughtful on how fast we moved as well.
Now, was there ever a time where there was a certain metric or business dynamic that you believed needed to be revealed broadly across the organization, or maybe just better exposed to a certain part of the organization? From a strategic point of view, you realized the market's changed in some way, or we need to be focusing on this more. How do we get this number more visible or educate more people about it? Anything?
Yeah, I think interestingly the company initially started as a transactional business, so they were actually getting paid on the number of stock certificates that were issued, and made the transition to SaaS in 2015, I'd say. So it's still pretty recent,
Yeah.
2015, 2016. So it was actually it was 2016. So right before I joined. So they were still in the transition of like, what does it mean to run a SaaS company? How do we think about the metrics? And so a lot of my initial focus was, all right, let's spend time on that to make sure everybody understands it. So one thing I was really focused on in the early days is really emphasizing the importance of net dollar retention, gross and net retention, but in the end, really driving the dollars and making sure everybody understood how they impacted it, right? What does it mean for the sales team? What does it mean for the support teams? What does it mean for everybody else in the company from a product standpoint? What can we do to increase stickiness, to make sure people do more with us? And so that was one of the metrics that we started to talk about all the time. As a way to make sure we understood how much of that was driving the growth versus kind of new customer acquisition, and really trying to break apart all the components of it. So that was really relatively simple, but making sure that all those metrics were well understood and tracked.
Many finance leaders have begun to tell us that they're closely examining how their organizations leverage AI and whether there are areas they might be lagging in terms of cost and savings or other strategic benefits. Has your team undergone an AI reality check these last 6 months or so? I mean, is there, and I'm sure AI is part of the regular conversation now, but what would you tell us?
Yeah, it's funny because now I'm actually asking all my teams, how are you using it? Where could you use it? So we're definitely having more ongoing discussions organization wide, but in finance in particular. It's funny because in the early days, I saw them move a lot faster and even putting analysis together, because they're like, oh, I just ask ChatGPT how to do this, and I don't have to like figure it out by myself or ask somebody. It was solved in 2 minutes. And so, surprisingly, even basic things like this accelerated them, especially all the junior folks on the team are doing an even faster job in going through complex analysis or data analysis to be able to understand how to do it. We are working on, from a planning standpoint, how can we use AI? The challenge there is always, it works if your data is really clean. And given we change a lot, we create new products, there's a lot of movement in our data. It's in a good spot, but we're trying to be thoughtful around how we can now put an AI engine on top of that. We are leveraging in some of the tools that we have, the ability to do reporting by just asking, like, show me X, Y, Z over this time period. So it's not as manual to pull information. So a lot of it where we're starting is just trying to simplify or automate existing processes. We're not trying to recreate anything different. No, it's just how do we make a lot of the manual process that still exists, and the team's done a phenomenal job automating things over time, but manual process still exists. How do we address that? So then we first start with everybody spending time on more complex topics and engaging even more deeply with their business partners. So that's where we spend most of our time, is how can we use this new technology to kind of remove any manual or human interactions.
We're curious about sort of that, your existing technology platforms. There's a sizable investment there. We were just talking about it. Perhaps that's been made. Are you confident the applications that make up your existing finance stack is going to be AI ready, so to speak? Is your ERP, for instance, AI ready? Are the platform technology vendors telling you, we're there, you can count on us, that we're gonna make certain of it? I don't know.
It's a good one. It depends. Interestingly, the ERP is a good one. My perspective on that is, I don't necessarily expect my ERP to be AI ready, as long as they provide us the ability, and they are, to structure data in such a way that then we can run models on it on the back end, right?
Yeah.
Where we spend most of our time is let's make sure we record transactions in a way, and then we can use them from a planning standpoint, from a decision-making standpoint with our business partners, and that's where we would apply AI. And the platform we use for those types of use cases, yes, is very much working on AI and has very clear use cases they want to solve. So I think it depends on the technology partners. There are some where we want them to, and for the most part they are. And there are some where I don't think it matters that much, or even if they do, I don't know that it changes our behavior. So we're also trying to be focused enough on where we do it versus having people too distracted.
You mentioned the company's been acquisitive, and it sounds like those are acquisitions on your watch that were made on your watch. Is that right? Can you share with us as you complete these different acquisitions how your M&A sensibilities may have changed? Are you looking for specific industries? Are you looking for add-ons in geographies? What's on the menu?
Yeah, some of the most recent ones we've done was actually geographies, and so we've done a really good job scaling in the U.S. and we've got we're the largest player in this space by far in the United States, which is also the largest market in the world for any equity related topics. But with the growth of just equity being more broadly distributed to employees in the world, it's still generally behind the U.S. We are seeing movement in Europe, in Asia, and so we've made some acquisitions in the UK, for example, which is the largest capital markets market in Europe. And so we did the usual evaluation of what would it take for us to go from scratch, and can we scale our existing platform to serve the needs of customers in the UK and the broader continental Europe. We found a platform that operated very similar to how we operate. Culturally was a really good match with us, to my point earlier. And it's just from a valuation standpoint, we all got to a point where we were comfortable. And so it accelerated a lot of our R&D roadmap. And so it made a lot of sense for us to do. Similarly, for our investor business, we did the same thing. We wanted to have more presence in Europe and went through the same analysis and found a company that fit the bill and kind of checked a lot of the boxes of what we wanted to build ourselves. And so it often comes back to, what is your strategy? What do you want to do? And how does an M&A transaction fit into that? And where I've seen the most success in the past is you already know you want to do something because you have conviction in terms of what you need to do to support your customers. And this is a company that would just accelerate doing that. It's still complicated to integrate, to bring people together, but you bring a lot of knowledge. Oftentimes these companies have spent years thinking about the problem that you're just getting ramped up on. And so that acceleration in execution is always what's interesting. And we've been lucky enough to be able to do that.
Can I just, when I look at your offerings as you explained them to us and visiting your site, it seems like some of these types of offerings are available through what we would call HR, ACM application vendors. Other parts of it, not at all. Like they're much more sophisticated in some way related to the investments and the valuation tools. How am I doing? Am I right about that? It seems like you're distinguishing yourself from a broader group of application players.
Yeah, so we're connected to a lot of these players. So HCM providers is a great example where a lot of their information is used in the context of issuing equity to employees. But there are very few. We don't compete with the folks.
You complement. You don't compete. Yeah,
we're often partners,
yeah.
And so HR information very much is connected to what we do in terms of when an employee gets hired. It sends the information to our system to issue the equity, and we can send information back. Those types of things. But we don't really compete with any of them in terms of what we solve. And at this point, we're large enough in the U.S. that they are seeking our information to be able to bring that back into their applications to provide that information to their customers as well.
It seems like this is a area that many finance leaders haven't made a priority perhaps yet to address or invest in tools to address. They're still trying to get the house in order in other ways. But this is a natural, they could find a lot of value here and they realize that. How am I doing? Am I wrong about that? Or, is it, maybe certain industries are more progressive and understand the value that these tools can bring quicker than other industries.
Yeah, and you're right. I think depending on the vertical or the industry you talk about, you'll have different needs. So that's also something we're evolving and kind of adapting the offering to those needs. But where we started, and still the main activity we support are tech companies. They're very progressive and active in deploying equity to incentivize their employees and tend to raise capital regularly, which we help support as well. That's where it starts. But interestingly, like now we're also supporting private equity backed companies, not just venture capital. And if you see how the venture capital investors are talking about equity, they've all shifted their perspective over the last few years in that it used to be, we'll just give equity to a few people on the management team. We'll incentivize them to make all the right long-term decisions. Well, that's changed to, well, let's start to give equity a little more broadly to the company. Not necessarily every employee, but a much broader set of them, understanding that unfortunately for them and for maybe that's the way to attract the best talent. That is just the reality today. If you don't give people a participation in the value they create, it's going to be tough to get the best people. And so they've all come to that realization. That's also what's happening globally, and especially with not being able to hire remote folks. That pressure, I think, is only mounting on companies that have not done this historically. This is where I think technology has been in the forefront, but a lot of folks are following it very quickly. And that's certainly what we're seeing. Like, we're starting to see a lot more family-owned businesses want to be thoughtful about, hey, I want my employees to be able to participate. As I mentioned, private equity, but we'll have medical offices come to us, golf courses, just folks who just have to manage a distributed ownership where it becomes so complicated that just having a tool to help them do that becomes a need.
Right. Okay. Well, thank you for that. We're up to our finance strategic moment question, where we just ask for one moment of strategic insight that you've experienced along the way in your career that made you maybe pursue an opportunity or avoid a risk, whatever it may have been. What comes to mind when we ask for a finance strategic moment?
So to me, it was learning the value of transparency and coming from, as we discuss, mostly public companies through my earlier career in finance roles. I've been trained that you can't talk about this. Like, this is just material, non-public information. And so generally keeping things relatively close to the vest in terms of finance information. And coming to Carta, the company was already quite transparent. We were still figuring out what to talk about from a finance standpoint. But the learning of, once you make that information available and clearly explain what it means as to why we care about gross margin, why we care about net dollar retention, why we care about sales efficiency, all these metrics that we track, I've always been positively surprised on how much people care about them and how much they take ownership, and then identifying ways to improve these metrics in their respective areas. Even most recently, we've started to talk a lot more about how do we think about profitability and cost. And of course, in this environment, once again, we've been very transparent. Here's where we spend our money. Here are the things we want to work on. And then everybody came back with opportunities to save costs. There's a side of me that was like, why didn't you tell me earlier? But again, it comes back to as long as you're transparent and explain what you're trying to deal with, it really helps drive productive discussions between finance and the rest of the business. And then related to that, we did a lot of work over the last couple of years to actually break down our business to have a P&L by product area, really top to bottom. Like, so here's the revenue, here's the gross margin, here's how much sales and marketing we're putting behind it, here's how much R&D we're putting behind it. That completely transformed the internal discussions and the discussions with our board, which means we can actually look at what's the rule of 40 for every one of our product areas. What's the profitability profile? How do we think about relative investments? And so the trade-off discussions you're having, the discussions can be more in depth in the boardroom around, like, well, how do we think about investing more in this business versus that business? Here's the growth profile of this one. Here's the unit economics of that one. Because all our businesses have slightly different profiles. That was, I will forever continue to do that. As difficult as it is for the finance team to put this together, because it was a big endeavor to really structure everything in a way where we can do this automatically, but well worth the investment, because now it continues to drive really, really useful discussions and productive discussions on understanding what each decision will mean for different product areas.
Now, from episode 740, this is CFO Roy Simmons of GE Lighting, a Savant company.
The pivot that we went through in 2019 in preparation to join up with Savant was to establish ourselves in I'll call it a standalone middle market finance organization, where we had to retool and redefine treasury. We had to retool and redefine controllership and tax. We needed to hire talent into the business so that we didn't have to survive with General Electric Company transition service agreements, the nemesis of many CFOs in post-divestiture worlds. And so that year that we spent prior to the actual consummation of the sale was around building that, I'll call it standalone.
Nice. Thank you for that. We're going to jump to our mentoring round, where I'll ask you several quick questions intended to inform and inspire future finance leaders. We want you to think back to 2017. That first 90 days you stepped into the CFO role at Carta. And if there could be just a piece of advice you would have given yourself, if you could go back in time and just say there was something you wish someone had told you. Well, anything come to mind?
Yeah, it's advice I was given, but I don't always apply as well as I want to. But I'd summarize it by saying anticipate, meaning in my role, well, think about what's on the CEO's mind. Think about what's on the board's mind. And the reason I say that I see this as really critical advice as you step into a role is that it will quickly force you to think about what really matters beyond just the financials, beyond the finance topics, which invariably you'll get sucked in. Right? Hey, you're here because we want to scale the business, put in the right processes, put in the right visibility. I think it's a risk to be too focused on that and forgetting, well, what's on the CEO's mind? Because in the end, a CFO's success is based on how effective he or she is in supporting the CEO and the rest of the executive team. So if you are not solving what's on the CEO's mind, it gets challenging. Like, you're not focused on the right things. And then relatedly, if you're not focused on what's on the board's mind, doesn't mean you have to do specifically what they say, but at least be aware of their questions, what they don't understand well. And I think that's always needs to be back of mind. I think I give this advice to everybody stepping in a more leadership position for finance, because I think that's critical.
Charlie, we always like to ask our guests to reflect a little on the personal side. We're wondering if you have a personal habit, part of a daily routine, something that sets you apart. This is something that's perhaps been pointed out to you from colleagues, maybe even a family member. He's always done that. We don't know why.
Yeah, if you ask my team, it's probably something I do that's really annoying to them, but I feel strongly about, which is how we present information. And that's probably my background in consulting and investment banking. Just putting a table of numbers on a page doesn't help anybody. What do these numbers say? What are we trying to say? Right? It's like, and I find myself oftentimes pushing the folks who work with me on, we have like these 10 slides. What do they really mean? What are we trying to communicate? And so, yeah, I'm really annoying about this because I feel strongly that this is part of our role as a finance team, is to be able to communicate things very simply and very convincingly, but that requires thought. It's not one graph here, a table here. It means really being thoughtful about how we present things, how we cut things, to make sure that then decisions can be made quickly, that whoever it's presented to can act on that information as easily as possible.
I'm curious about your language skills. Were you young when you began speaking English as well?
I was a teenager when I started speaking English, but I went to elementary school in Dutch and French. I grew up in Belgium originally, where Dutch and French and German are all official languages. And so you end up learning them very, very early. And I think that made it a lot easier for me to pick up other languages. And so.
Okay. What about a book? Would you have a book selection for us?
Yeah, there's, I reflected on that a little bit. And there's one to me that keeps coming back to mind. And it's a Dale Carnegie book, an old book, 1936, on how to win friends and influence people. Why I recommend it is just a lot of, it seems obvious, but there's a lot of really important truths on how to manage relationships, how to engage with folks. Things as basic as don't start telling somebody they're wrong. That doesn't go in the right way. Very simple things, but I think it's such a foundational book on how to think about engaging with others. And why I find it very helpful for finance teams is that's what we do. Like, once again, we're only as effective as the relationships we can build with our business partners. And this is actually a book we ask everybody at Carta to read when they come in. We buy them the book, and this is one of the required readings before you join us. And so I'm a big fan of it.
Yeah, thank you. And it might not surprise you to learn that it's been recommended many times. And I always love getting another recommendation for it because, again, as you pointed out, it'll be 100 years old next decade. And so it's lasted the test of time. There's a lot to what that little book actually has put forth. So thank you again for mentioning it. It'll certainly get certain people to finally go out and buy the editions. It's always in print. It's always in print. You can find it at any airport. Pick up a copy. Excellent. Thank you. We're up to our final question where I'll ask you to look forward finally. And what we're interested in are your priorities over the next 12 months as CFO of Carta. What would those be?
Yeah, so a couple of things. We're, as it won't surprise you, we're very focused on our path to profitability, and we've made really good progress this year. So I'm spending a lot of time personally with everyone on understanding all our efficiency ratios across the whole business and what it means for us to be. So we're not profitable yet, but we're on the path for us to be on the back end of next year. And so that's next 12 months, big focus for me. How do we get there? What does it mean? And then related to that, unlocking the next phase of growth. We've got a few products. We're working on a few other ideas and kind of really working with the management team on what's the next big bet, if you will. Like, how do we think about the investment and sizing that? So those two are really top of mind for me.
Charly Kevers, thank you for speaking to us on CFO Thought Leader.
Thanks for having me.
Hello, Thought Leader listeners. As you have perhaps already heard or even seen, we're now featuring the career lessons and moments of strategic insight shared by our CFO guests as Thought Leader videos. You can now find these videos on our blog at cfothoughtleader.com and, of course, our newsletters, but also on LinkedIn. If you haven't already, please go ahead and follow our CFO Thought Leader LinkedIn company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.